The Construction Market Guide is designed to provide timely information to construction executives to help them attract, train, and retain the most highly skilled workforce possible, to understand input costs and the direction of those material prices so they can bid as competitively as possible, and to understand the broader economic environment so they can forecast and make solid decisions for their firm. Finding and retaining skilled workers continues to be the #1 challenge our construction clients are facing in the current environment. Looking at materials costs, we see prices have been moderate. Oil prices are down about 5% on the year. Iron and steel prices, which had increased due to tariff pressure, have now receded and are back to more normalized pricing. Asphalt paving mixtures as well as lumber prices have seen a single-digit 1 to 2% increases over the last year. New housing starts have been fairly stable. The gross domestic product, the output of the U.S. economy, continues to be moving in a positive direction, continues to grow, although GDP has slowed a bit and is expected to continue to slow into 2020. Looking at year-end pay raises and construction wages, if you're wondering what the average rate of increase is that companies are giving their workers, in construction we see 2.38% as the average year-on-year construction wage price increase. Looking at real estate prices, they've been on a pretty substantial growth trend here, up about 13% on the year. Overall total construction spending has been modest, 1% or so as an increase. But looking at the consumer, which drives the bulk of the spending in the U.S. economy, the consumer continues to be strong. We see high consumer confidence and a strong balance sheet for households, which allows them to have the capacity to spend over time if they choose. And corporate balance sheets are also strong with low debt levels, higher than in the past in terms of total debt, but because company values have gone up so much, the debt level relative to value is very reasonable and actually lower than typical historically. Interest rates continue to be extremely low, so companies that want to borrow money to do construction projects have the ability to do so at very attractive rates. For owners who want to diversify out of their companies into publicly traded stocks, the stock market's been on a tear this year. It's been a fantastic year in stocks, both domestically and internationally. We see large companies in the U.S., the S&P 500, outperforming both international and small companies in the current environment. For companies that have had a profitable 2019, before the end of the year is a great time to do some tax planning. 401k profit sharing plans represent an excellent opportunity to both diversify assets out of the business, take a tax deduction for it, and reward employees, as well as put assets for yourself in a place that's exempt from creditors. So encourage people to take a look at that. Talk with your CPA, your financial advisor, about those opportunities, as well as other opportunities to replace equipment and other property that might be tax deductible, although I caution people to avoid what I refer to as the drunken sailor tax deduction, which we have another video that gets into more detail with the CPA about. Thanks so much for listening, and have a great 2020.